there's somebody out there, and nobody knows who it is, who's taking delivery of an awful lot of large 100-ounce bars, way above average, and it's ongoing. The speculation as to who it could be the central banks, it could be the US government itself, it could be Berkshire Hathaway. We just don't know, but someone out there is accumulating gold and physical gold big time.
So it's Friday, August 1st, 2025, Maneco 64, home of alternative economics and contrarian views. We've got Clive Thompson on this morning as usual. Hi, Clive. Good morning.
Good morning, Mario, and my financial advisor behind me here is wishing you a good morning too.
Okay. Tigger. Yeah. Is that his name?
Yep, that's Tigger. Yeah.
Yeah. And yeah, today, of course, is the second Liberation Day. And I notice that the US has put 39% tariff on Switzerland, which is where you are, Clive. Can the US replace Rolexes and Swiss cheese? Can they buy something better in the US?
Well, it's well known that a lot of Americans are very overweight, and so it'll do them good to eat less chocolate and drink less Swiss wine.
Maybe, or maybe it's the processed food, junk food. Anyway, I don't want to get too much into
So
that,
yeah,
but
yeah, if they want to buy less Swiss chocolate, let them. I don't mind.
yeah,
At the end of the day, we're buying a lot. Switzerland, what they're measuring here about the trade difference is the physical goods which are moving, and it is true. There's a lot of physical goods moving from Switzerland to America for various reasons. Obviously, the watches, and then, of course, you've got things like gold bars as well, which are manufactured in Switzerland because we have a lot of Swiss refineries here. Obviously, the gold doesn't come from Switzerland. The gold comes from Africa or wherever it comes to, it gets refined in Switzerland, then shipped off to America. But on the other side, which is not counted in the trade, there's a lot of intangible goods coming from America, like services and digital services in particular. So it kind of balances out at the end of the day, but they're not taking that into account in judging which side's got the advantage.
yeah. The other thing I would add, and I'll bring up a chart here of the Swiss franc, the dollar versus the Swiss franc. We've heard many times in the past from the US Treasury, from not just the Trump administration, but other administrations, that countries are manipulating their exchange rate to get bigger trade surpluses. So I want to share, because this is a fallacy, I think, because here's the dollar versus the Swiss franc in the last 20 years. If anything, I would say that it's the US that's manipulating.
Yeah, so I mean, absolutely, the Swiss franc has been going up, up, up in value, which is not manipulation of the currency. It's when when the Swiss franc goes up, it becomes much harder to sell goods to the Americans. Obviously, what the Americans are complaining is countries are manipulating their currency. So they're complaining, for example, the Chinese exchange rate is falling, making Chinese goods cheaper. But that's definitely not the case with Switzerland, because Swiss goods are getting more expensive, not only in America, but all around the
Yeah.
world.
So, in just about 20 years, the dollar is halved in value versus the Swiss franc has gone from 160 to 80. But even the yuan, I don't think if we bring up the Chinese currency, let's see, you know, uh, yeah, this is this is the how many yuan you get per dollar. Actually, the dollar since 2006, the dollar has also gone down versus the yuan. If you look at it that far, 826.
Yeah, I mean, since 2014, though, we see that the Chinese currency has been
Yeah,
falling, falling. So it depends on, everything depends on your starting date. I mean,
yeah,
I remember when I was working in wealth management, one of the greatest tricks wealth managers and investment managers would play, and I didn't like this because I thought it was very disguising the truth. When they want to demonstrate or make a point, they'd pick their starting point, their starting date, so that they could make the point. So if you're trying to prove that a particular fund has outperformed an index or prove that a stock is better than another, you could go back in time and find a date when it was particularly high or particularly low and prove your point. Obviously, I didn't really like that, and I didn't do it. But it was very, very common. We often had presentations coming to us from the experts saying this is a great fund, and they'd show you a chart. And of course, the one they wanted you to go in was always an outperformer. But then you pick another date, and it wasn't.
Yeah. So, Clive, let's move to silver because, and gold as well, a little bit, because in the last few days, gold and silver have corrected quite sharply, especially silver, and people are worried. But looking here, and I'm going to bring up this chart, and then we're also going to look at market caps, but bringing up this monthly chart of silver. So we're already in the month of August now, but in the month of July, we closed at 36.72 or thereabouts. So it's the highest closing level since August 2011. So silver actually closed, at all, like almost a 15-year high. And I think that's positive. Yes, it's come off from the highs, as we can see here. And this candlestick looks a bit weird. I don't know if it's bullish or bearish. So what do you say? What do you think's happening in silver? And is the party over already? People were talking about $40 silver, $50 silver. I'm still bullish, and I'm still continuing to try to stack silver as much as possible, as well as gold, of course.
Well, I don't think that charts on their own, without external information, tell you the future. But when you have external information, then you can interpret it in a way which will tell you the future. And so what I see here is a rising silver price. Okay, that's useful. I mean, okay, it's come off for the last week or so. That's neither here nor there. And at the same time, we know that the demand for silver exceeds the mined supply, the demand coming from electronics industry and other industrial usages. So that, according to all the estimates, and my primary source for this is the Silver Institute, the gap between mine supply and industrial use is going to grow bigger. It's been growing. We've been in a deficit of silver for the last few years, and that explains why the silver price has been rising. It has to rise to suck out recycled silver into the marketplace because there isn't enough silver coming out of the mines. And that gap is going to get wider in the future. So logically, silver should continue to rise to suck out that recycled silver. So do we get confirmation by looking that that's actually happening? What's the chart telling us about itself? Well, the chart is actually, when you look at that chart, it's telling us that the direction of travel is upwards, and that makes sense with the information we've got. If it was going in the other direction, I'd say, maybe somebody's lying to us. How could this price be going down when allegedly the demand's going up? But obviously we're told, and we have to believe this, that the demand is going up, especially from the electronics industry. So I personally think this chart is confirmation of what we already know, that there's a supply shortage, and that shortage is going to get bigger.
Yeah. And you sent me, where is it? Let me have a look. This one here. Comparative asset market capitalizations. And when you sent me this, you said Nvidia is more than twice the size of the silver market. Can you tell us why that is significant? And
Yeah.
of course, I think Nvidia is heavily overvalued. So.
So the big market here that you see, the biggest single asset that you see on that list is gold, which has got a 23 trillion market cap. But as we come down the scale, we get to Nvidia at 4 trillion or over 4 trillion. And you're going to tell us a little bit about Microsoft as well, Mario, I think. And then you get down to silver, which is half the value of one stock. It's half the value of Nvidia, or if you like, half the value of Microsoft and probably one or two others. So the silver market, the point I'm making here is the silver market is only 1/10 of the size of the gold market and less than half the size of the two biggest stocks on Wall Street, at least. It's a very small market. So if we have some sort of loss of confidence in the let's say the Nasdaq or the Mag 7 or the top stocks, where's that money going to go? You only need a very small amount of it to go into the silver market. It will push the silver price a very long way. That's my point. Silver is a tiny market compared with gold. But if you look down a little bit further to platinum, that's silver's 1/10 of gold, but platinum is nearly 1/10 of silver.
Yeah,
So it's like
right.
not nearly getting on for 1/100th of the amount of gold. So even a tiny bit of money moving into silver or platinum will push the price a long way. And I have discussed with you the trigger for what might move gold up. So if gold goes up sharply, and there is a reason to think it will, if gold goes up sharply, there will be sellers of gold and piling into silver, but that will have a much more leveraged effect on the silver price than it does on the gold price. Because if you take a trillion out of gold, it hardly moves the market. But if you put a trillion into silver, it pushes you've got this hugely leveraged effect because silver's only a 2 trillion market. And I have written that article the other day about what will happen if Scott Bessent does go through with his plan or his words to monetize the asset side of the Treasury's balance sheet, of which the most undervalued asset is gold, and the biggest asset is gold, and the most liquid asset is gold. That's the one thing they can monetize and make a ton of money very, very quickly, paying off the current year deficit, paying off next year's deficit, and of course, reducing their national debt. Now, we don't know if he's going to do it. We don't know, and if it is done, we don't know when it's going to be done. But if it is done, it's likely to be done at a much higher gold price, engineered gold price, than the current price, which would push, that would have the very leveraged effect on silver. That's my point.
Yeah, and here's a chart of gold. I mean, I've seen videos now. People have sent me videos. I'm not going to mention names of people saying, "Oh, be careful, gold could crash." But yeah, it's anything's possible. I mean, but I personally think we're just in a consolidation here. If you look at the weekly chart, it's pretty much what happened here and what happened here. It takes a little while. I think the reason it's taking longer now it's because this move here from the beginning of the year was very strong compared to these previous two moves. So it would take a little longer to take out all the speculative and longs and stuff. But
Well, you're right, Mario. It would take a long time, but on for these people who are saying it's going to crash, I can tell you, it sounds like a broken record to me. All my career, I've been hearing people point to assets which have just risen in price, and it doesn't matter whether it's a week after or a year after. Maybe they're going up for 5 years or 10 years or 20 years. They'll point to the asset and say, "It's too high. It's going to crash." Well, what I've come to learn is when people say this, they're trying to justify why they didn't buy any at the lower price. People have got to get this out of their head that yesterday's price was the right price. I mean, but the world is full of people who are looking for patterns in the price. They see a price pattern and they always think that, I mean, this is not everybody, by the way, it's not me, but there are people out there who always think that last week's price or last month's price or last year's price was the correct price. And because the price is different today, it's got to go back to the old price. And then they try to justify the fact they didn't buy that asset when it was a much lower price by saying it's overpriced now. The old price was the correct price. But I think not. I mean, look at the increase we've seen in government debt and the money supply over the decades. It's literally ballooned through the roof, and that's what's driving the price of these limited supply assets like gold.
yeah, and I don't think it's going to stop these indicators like the debt and money supply. We've seen M2 money supply, not just in the US, but in the EU, Australia, Canada, China. It's making new all-time highs, and they're not going to stop the wheel moving, the hamster wheel. I saw President Trump posted something recently, and he said, "Too late. Powell needs to cut. The economy is doing well, but we need people to be able to borrow, to buy their homes, and to refinance." So it seems to me that the Trump administration and other administrations around the world, what they worry is about is people when people stop borrowing, because that could implode the whole financialized economy, and that would mean really it would cut all the tax revenues. It would put governments in real trouble. So here's the monthly chart, Clive. It looks quite weird. The last 3 months, no, 2 months or 3 months, we kind of settled pretty much at the same level, and we've had a little bit of a range in between. So I like to look at the long-term ones, and then you look at the quarterly one. So yeah, we're still, I guess, in the third, July, August, September. So we're still in the third quarter. Yeah,
I mean, there's a very good chart pattern which only really applies if you could use it in conjunction with knowing other things, and that's called the flagpole. A bit like the corner flag on a football field with a little triangular flag. So when you see the price rising, and then it pauses and it comes back a bit and then goes up and down in a sort of zigzag pattern, but moving towards a triangle at the end.
like this one, yeah, the weekly one.
Exactly. There I see a very nice flagpole pattern. Now, provided you have other information, which we do have, and we've talked about that, you can that in general is a very, very bullish signal, because when it breaks out of that triangle pattern, it moves a long way and in the direction of the flagpole. So in general, it should go up. But as I say, you've got to have other information, which we already do have because we've discussed
Yeah.
it many times. But you've drawn the flag there, and you see the pole on the left hand side of it. So it could take a few months before it breaks out, but when it breaks, it's going to go a long way.
Yeah, I thought a couple of weeks ago when we broke out here that it was going, but it hasn't. So we're back in the flag. So more consolidation. And yeah, Clive, what else is going on that I wanted
Well,
to?
we should talk about the Federal Reserve's meeting on
Yeah,
Wednesday.
yeah, yeah.
I listened to the speech, and then which was the speech was pretty much a nothingness. I was playing FOMC bingo, which is when you have all these buzzwords like interest rate policy and 2% inflation. You cross them off one by one to see if you get a line or a bingo. But so that was boring. But the question and answer session after it was quite interesting. Obviously, he got the usual questions, but what came out of that were two things. One, there seems to be some dissent amongst the governors, with two governors voting for a fall in interest rates and the rest not. And the second thing was I got a strong feeling that Jerome Powell is trying to walk the market away from an expectation of a September cut. Before the meeting, it was quite clear the whole world didn't expect a cut. Sorry, something speaking to me there. Well, the whole world was expecting a cut. Not expecting a cut on Wednesday. It didn't come, but the whole world was expecting some kind of. Sorry, let me just turn this off. My telephone ring. Was expecting some kind of signal to say that September will have a cut. And I don't think we got that signal at all. In fact, I kind of got the impression, and I'm using from Jerome Powell, that maybe the next move might be a upwards move in interest rates. And the thing which kind of really gelled with me was somewhere in the middle of that conference, he was asked a question, and his response was included the words, "We didn't raise rates."
Yeah,
So that was a question about if the fact that inflation has started to tick up now, and he said, I can't remember the full sentence, but he said, we didn't raise rates. Now, at the time he said that, the stock market was riding high, like the NASDAQ was up 150 points, and immediately it turned south and went down, down, down. And then by the time the conference was finished, NASDAQ was back up again, up 150 or 200 points. But what I found very strange, or not strange, but very interesting, as he said those words, we didn't raise rates. The market started coming off very, very sharply, and then I think he must have said something else which calmed fears a little
Yeah.
bit. But it sounded like they're not quite. It sounds like they're. I don't know the word, but it sounds like they're sort of getting a little bit more. Let's not set too many expectations of a rate cut because maybe we won't, even though they've got two dissenters who want to cut rates.
I agree with you, and apparently that was the biggest dissent since 1993, which is quite interesting. Yeah, we hear a lot like how the U.S. economy is doing really great. It's the hottest economy. It's oh,
People say they're attracted to London, and that's part of the reason why they like come to
Clive?
London Business School. And they say London, I think they're attracted
That's your end,
to
isn't it? Not
university.
Where's
mine.
it mine?
And the point of difference.
I believe
Where's
you are.
that from?
Culture, art, business. That's at the heart of why we all chose to come to LBS.
Where's that come
Not
from?
quite the city, but the difference that there's.
I was checking, not mine. I don't think it can be mine.
Oh, I think it was I had the investing.com on.
Okay, yeah. And it played an
Sorry about
advertisement
that.
to you.
Yeah,
No worries.
yeah, sorry about that. Well, and I had that page on actually because I wanted to talk about because you're talking about the FOMC meeting, and yeah, I agree. If anything, I think if Greenspan was the chairman of the Federal Reserve and he saw what gold's doing, what the stock market is doing, he probably would be raising rates or definitely not cutting. But today we have a really important number, which is the non-farm payroll, which comes out, well, most of the time, the first Friday of the month. And I saw that the expectation is quite low, only like 100,000 new jobs. I think the U.S. economy needs like over 200,000 to keep with the demographics every month, even though this statistic is all a survey. It's not like real numbers. And I could see a very weak number. And why is that? Well, because the U.S. government controls the BLS. And I think if we start seeing weak jobs numbers, maybe that will be what pushes the Fed to cut rates. I don't know, am I being a little bit too conspiratorial?
Well, yeah, maybe. I mean, the market does pay a lot of attention to the non-farm payrolls number. I think that's unjustified because almost every single month they revise the previous month and they revise the month before, and they always revise it in a way which makes the current month look that much better than it really is. So it's jiggery pokery with the numbers. So I tend to sort of take every time I see the current month, I tend to take it with a little bit of a pinch of salt because I know that number is going to be revised in a month's time and 2 months' time. But yeah, the market will react to those numbers because that's what the market does. It's very focused on those numbers, and of course that reaction will last for maximum 24 hours, and then we'll be focusing on something new.
Yeah, Clive, I wanted to touch upon BRICS because a week or two ago, Trump said that BRICS were irrelevant. They had a meeting, no one showed up. But now it looks like indirectly, he's like declared war on BRICS. He's not happy. He says BRICS are anti-dollar, anti-American, and I think that's wrong. I think BRICS just want more. They want more multilateralism. They don't want a unipolar world, and they want to be heard. But be as it may, he's imposed some tariffs like on India, Brazil, and he could impose secondary tariffs on China for buying oil from Russia. And it seems like those countries in BRICS are being targeted, not because of the trade situation, but political situation. So it definitely seems to me that he's concerned. And I listened to a guy called Alex Christoforou. He does the Duran. He's a really good geopolitical analyst, and he said that it looks like the trade tariffs are the new sanctions. So just wanted your view on that, whether this attack on BRICS could backfire on Trump, because they could come back and say, well, we're going to stop using the dollar even more. We're going to offload a lot of our treasuries. Yeah.
Well, when there's a tariff, everybody somehow pays for it. But, at the end of the day, it's a tariff on the Americans themselves. So the Americans who have to buy goods will have to pay more for their goods, but they haven't got the money to pay more. So the importer and the everybody down the chain is going to have to reduce their price a little bit. So the exporters will suffer, the importers will suffer, and the American public will suffer. So what's he doing? He's obviously successfully raising revenue for the United States, and I can't see anything wrong with a company deciding to raise revenue for its own country. But we all know from Economics 101 that tariffs are not a very good thing globally, because it stops resources moving to the places where they're most efficient to be. So if we have no tariffs, every product which is manufactured on the planet will be manufactured in the places where it's most efficient to do that. And that means probably places like the United States will be much more service focused, software and AI and things like that. And other places where they have low labor costs will be much more manufacturing focused.
Yeah, but my question, Clive, I know what you're saying there, but my question to you is this political attack, it seems, on BRICS, is that going to backfire even more? Are BRICS going
Yep.
to, do even more to try to get away from the dollar system?
Yeah. Yes. Absolutely. The weaponization of the dollar does mean that there's now a real worry that from countries all around the world that they need a plan B. And to have a plan B, you've got to have something which actually works. So an alternative to the dollar is something which everybody is working towards and it's not, I think it's not just the BRICS, but obviously it is led by the BRICS. So I think it's only a question of time before we see some sort of alternative currency system starting to emerge. It will take some years. It's not like it's going to come out tomorrow. And by the time it does emerge, Trump will be long gone anyway, because he's only got a 4-year term. So, but I think it's coming. And I think down the line, the BRICS countries will have an alternative payment methodology, and they won't have to use the dollar. They'll probably be using some alternative system, which I think will include gold. I think it will have to include gold, albeit that the gold won't be moving, but a currency, perhaps a new currency, will be moving, which is convertible to gold.
Yeah, so I don't usually use ChatGPT, but I thought I'd do it and I asked who will end up paying for the tariffs President Trump is imposing on America's trading partners. And it says the short answer: U.S. companies and consumers end up paying the lion's shares of of President Trump's import tariffs, not foreign exporters. But there is an exception. But not a huge one, and it's to do with like goods like I think steel, and what happens there is that the steel companies that are exporting, they usually lower the price to like neutralize the tariff, but mostly it's the Americans that pay for it. So it says here broader economic impact. CBO, we know that their projections aren't great, but this is from the past. It said that the 2018-2020 tariffs reduced GDP by 0.5%, lowered average real household income by $1,277. Where's the part here? Oh yeah, here we go. A few sectors like steel saw foreign exporters lower their pre-tariff prices, meaning they absorb some of the costs. So that's the only time with steel, For example, steel exporters from EU, Japan, South Korea cut prices so that roughly half the tariff cost fell on exporters rather than US importers. But in most other industries, pass-through was nearly complete, with US shouldering the full cost. And I saw that what's his name, Lutnick, the Commerce Secretary, said, with all this revenue from tariffs, we're going to be able to cut taxes. But to me, it seems like, well, we're going to tax you $10 through the tariffs, and then we're going to give you back $1. It seems like a really bad deal.
Well, I guess the people who benefit from the tax cuts are not the people who are paying the tariffs, because the people who are paying the tariffs is the man in the street, and the man
Yeah.
in the street isn't paying the bulk of the taxes.
I guess Mr. Lutnick and his friends on Wall Street will
Oh,
benefit.
Mr. Lutnick will be benefiting from a cut in taxes if they do that.
Yeah.
Mario, maybe we should just talk about the COMEX gold deliveries, where I
Oh,
spotted
yeah.
something for the month of
Let
July.
me,
I don't know. I
yeah.
sent you through that.
Yeah, I've got a screenshot here. Yeah, here we go.
So I've been monitoring, as you know, the deliveries of 100-ounce bars out of COMEX, and we've noticed that in 2025, almost every single month, the amount of bars being taken as delivery, and it's something which is not very normal to do that, is 3 times or more what it was the year before. And then we had this month of June when there was a lot of there was a lot of movement in May due to tariff fears, and then June was about the same. But July, we're back to 3 times the level of deliveries. There's somebody out there, and nobody knows who it is, who's taking delivery of an awful lot of large 100-ounce bars, way above average, and it's ongoing. The speculation as to who it could be the central banks, it could be the US government itself, it could be Berkshire Hathaway. We just don't know, but someone out there is accumulating gold, and physical gold, big time.
And actually taking it out of the warehouses, I guess.
That's right.
Yeah.
It's being removed. I mean, it's being delivered in COMEX. It's being delivered, which means it's changing hands. We don't know if
Yeah.
it stays within the COMEX warehouses, but once it's changed hands, it basically means that someone has taken the decision to, as opposed to roll over their contract, which is fairly normal. They said deliver it to us physically, so it might stay in the COMEX warehouse, but it's no longer part of the futures. They get it. They get
Yeah.
it.
Well, I would say it could be the U.S. Treasury because uh, if uh, if a private entity were doing that, I think they get into trouble because COMEX is not supposed to be a physical market. They hate it when people take delivery. So why would the U.S. Treasury be taking delivery of gold? Well, maybe because they will have to do an audit, and a lot of the gold that they had there has been leased out. And when you lease gold, you have to ship gold to the people that you lease the gold to. And you can't have an audit if the gold isn't there. And you can't really do a credible revaluation of the statutory price if the gold isn't there. So, or it could be Berkshire Hathaway, Clive. I saw as well that their, and I'll bring it up here, that their cash positions are, like it says here, Berkshire Hathaway's cash position is now 30% of their total assets. So they're concerned about something. And talking about Berkshire Hathaway, Clive, can you touch upon Microsoft? Because you look at the stock market a little more closely. Why did it jump up so much the other day?
Well, I think they had. I think they had. I didn't read the results, but I think they did have their results out. But they've just gone through a value of $4 trillion. Now, I remember it wasn't so long ago. It's probably about 2018 when we had our first 1 trillion company. That was Apple. Apple was the first ever company to go through the 1 trillion mark. But obviously, they've been overtaken now by, well, Nvidia and Microsoft in terms of market cap size. So what this is telling us is that irrespective of how valuable the companies are, the man in the street is buying the ETFs, which own the S&P 500, and as they buy the ETFs, money's pouring into the ETF, and that money has to go into all the stocks in the S&P 500 according to the market capitalization. So the more money people put into ETFs when it's managed by other people, the more these big mega cap stocks are getting squeezed. So we're now in the situation where the top 10 companies on of the S&P 500 represent just under 40% of the total weight of the 500 stocks. So you might think you're buying 500 stocks by buying the S&P 500, but in reality, nearly half of that is represented by just 10 stocks. And those 10 stocks are looking, to my mind, rather overpriced.
Yeah, and there's also comparisons to like Microsoft is like twice the size of the German economy or things like that, and it just seems crazy what's going on.
I mean, they're great companies, but how much do you want to pay for it? I mean, when I say how much, I'm not talking about comparing the old price with the new price. I'm talking about looking at the multiples on these stocks. And I'm just going to bring up, I won't show it on the screen, but I'll just bring up one of the tools I use, which is Market Screener, and it'll tell me instantly what the multiple of Microsoft is. Microsoft. So Microsoft Corporation, it's currently on a price earnings ratio trailing for, not even trailing, current for 2026. This is forward looking, 34 and a half times. Now I can tell you that's pretty rich. We've lived, most of my career, most stocks were at price earnings ratios below 20. When they're getting a bit extreme, they can go to 25. But this is really at the sort of levels we were approaching the levels we saw at the end of the dot-com. Now, it's not quite at those levels yet. That was 1999, early 2000. But these multiples are becoming more and more extreme. And suddenly 34 and a half times earnings, that's next year's earnings forecast, is a very high multiple. It means it's an expensive stock.
Yeah. You also sent me something about gold reserves, and I brought it up here. Is there something you wanted to say about this?
Well, I think the interesting point is that China, which is a regular buyer of gold, has got a long, long way to go, at least according to the official numbers, if you believe them or not. It's got a long way to go before they have got as much gold as the United States. And obviously, China's down at 2,000 tons and America's up at 8,000 tons, but China has got a much larger population than the United States. So really, and it's still got a lot of dollars on its books. It's got a long way to go to play catch up with the United States. According to the official numbers. Now, I know a lot of your viewers are going to immediately write in the comments, but China's got lots of secret reserves they haven't told us about. So that might be true. We don't know that.
Yeah, but I agree with you. There is speculation that they have like 30 or 35,000, but maybe they want to keep it like this because they want to keep buying. If they came out and said they've got 30,000, the price of gold would go through the roof. Their dollar reserves would plummet in terms of real value, I think. So yeah, it's a good point that they will probably continue to buy quite a bit and to match the US. And we don't even know if the US has, and the US is the other speculation, whether they have it or not. And one thing that's concerning is the little UK here. We only got 310 tons. I mean, we have less than Portugal, Taiwan, Poland, Turkey. I know Gordon Brown sold half of it, but even if he hadn't sold half of it, we still wouldn't have that much. And it's interesting that Germany and Italy, they have quite a bit, and France.
If I could make a comment or suggestion, and it's a positive suggestion to President Trump and Scott Bessent, the best way they can mess up China's purchasing of gold is to put the price of gold up. All they have to do is revalue gold to a much, much higher level. And we know the speculations out there because Scott Bessent says they're going to monetize the balance sheet. they remonetize gold at a much higher level. Let's call it $15,000 as an example. And instantly, it means that with the US dollars that China has got, they will not be able to buy as much gold as they've been buying in the past. And that will
Yeah.
mess them up on their gold acquisition program and put them behind in terms of trying to catch up with the United States.
Yeah, I guess that's why they are in close negotiations. Like this Liberation Day starts today, but with China, they've given China till the 12th of August, and a lot of people say, Clive, that these trade negotiations is just not a cover, but it's not the real. It's just the tip of the iceberg, and that a lot of the negotiations are going on in terms of the reserves and the price of gold, because ultimately gold is the what values assets. So you could be right about that. They could have. Yeah, some kind of shock for the Chinese. Yeah, I think we're near the end here. Before I finish, Clive, I want to recommend a book, and I think you like it too, aside from the viewers, and it's called Moneta, Ancient Rome in 12 Coins by Gareth Harney. It's a brand new book.
Ah,
Yeah,
funnily enough, Mario, I've got 12 Roman coins.
Oh, okay.
Yeah, they're denarius made of
Yeah.
silver,
Yeah.
allegedly. I know the silver content went down year after year as they
Yeah.
debased the coinage, but I've got some from the very, very early years, around the turn of the millennia, going through to about 300 years forward.
Well, Moneta is where the money derives from, Moneta. And if you read this book, I mean, I haven't finished, but it's great. Getting really good reviews. Basically, the goddess that was supposed to protect Rome, her name was Juno. And in 390 BC, the Gauls laid siege to Rome, and they were trying to climb up Capitoline Hill, and they had these geese up there, and the geese was sacred because you weren't supposed to hunt or eat the geese because they're like protected because of Juno, the protectress of Rome. But these geese sensed the Gauls coming up the hill, and they started, they woke everyone up, and and they defeated the Gauls in 390 BC, and so they built the like a temple to Juno on that hill. And so is Juno, and Moneta means, I think, warning. So because Juno, well, it wasn't Juno who warned, but the geese were sacred. And so they called it the Juno, they started calling her Juno Moneta. And that's where they started minting the coins up there. And I was there in October. I went up that hill. And so whenever people had a coin, they were down on the forum, they could see Juno Moneta, and that's why the coins became called moneta and money. So I thought that was really interesting.
And I suppose that on the front side of the coin, they would have had the emperor's head, and on the back side of the coin, they would have had one of the Roman gods. And I guess Juno was one of the gods which turned up on the back of the coins.
Yeah, I think one of the first coins had Juno Moneta, and on the other side they had the implements with which they used to mint the coins, like here, Fly.
Yeah, so yeah, I see that, and probably some of the goddesses on the back. She was probably carrying some scales to weigh the coins. I'm just betting here. I
Yeah,
haven't
but
seen them, but
yeah. Anyway, I think it's really interesting, and it's
so Gareth, what's the name of the author? Gareth. I'm going to
Harney.
get that one.
Yeah,
Okay, I'm going to order that one on eBay or whatever, or
yeah.
Amazon.
All right, and Clive, I bought a few days ago. I bought Vreneli.
Swiss coin, the Brunelli. Yes, they're about.
Yeah,
What's
I
it's
had
about?
seen it at my local pawn shop it's been there for months, and I said, oh, I better get it now. I'm not going to leave it there anymore. So
Did you manage to get it at last year's price?
no, no. I paid a little bit over the spot price, but I don't care because I think in 5 years it's probably going to be worth.
It won't. Whatever it doesn't matter what premium you pay today. It won't matter in
Yeah,
5 years' time.
that's the other thing I will say here, ending on my part, and I'll let you end, is that yes, the price moves around, and I've been through this since 2002. It's sometimes really frustrating, but you just have to have patience. And you'll be rewarded. Just look at what's happened since '02. Gold has gone from 320. That's where it was the first time I bought it, Clive, and now it's 3,300 or so it's gone up 10 times, and I think it's going to accelerate even more. And why do I say that? Well, because in 2002, there wasn't as much debt and leverage in the system. And now it's like crazy how leveraged the system is.
Yeah, actually, Mario, my first Krugerrand that I bought it back in the 1970s. I don't remember the price anymore, but it would have been well under £100. And now today, Krugerrand's 1 ounce coin from South Africa, 1 ounce of gold. Today, the price of a Krugerrand, so I was paying less than £100. Today, it would be two and a half going on £2,700.
Well,
Two
let
hundred
me
seventy
have a
times as
look.
much.
Let me have a look here at one of the biggest bullion dealers. Let's see, in the UK, 1 ounce gold coins. If you wanted to buy a Krugerrand today, you have to pay 2,580.
Yeah. So what's that? That's 25 times the price I paid much less than £100. I probably paid
Yeah,
less than 50. So it could be 50 times as much today. So it's
yeah,
not the gold which is worth more, it's the money which is worth less.
that's right. Okay, Clive. Great. Yeah.
Just a very quickie for your viewers. Immediately before this show, I uploaded a video in which I put a price on silver based on something which I think is about to happen. A lot of people will think that the price I put on silver is clickbait, but it's not. And I work through how I get to that absolutely astonishing price. So if anyone's interested, go and look at the YouTube channel Clive Thompson and have a look at what price I put on silver. And please don't write clickbait because it's not.
Okay, and yes, I'm dressed a bit more formally, Clive, because one of the viewers, someone that follows me on LinkedIn as well, he's invited me and my wife and I for lunch today. So that would be nice to meet someone new. And with that, Clive, I'm going to wish you a great weekend, and we'll talk on Sunday for the live stream, I guess.
I guess so. Yeah. Thanks very much, Mario, and thumbs up to everybody. Bye bye now.
Bye.